I started studying trading when I should have been studying for the engineering. Every single spare minute I had went into trading, and sometimes it actually harmed my social life because I was always working on trading. I want to win. And that could have been annoying for people around me, but I always wanted to be the best in class. I wanted to be the fastest guy on the soccer field. I always wanted to win. And I was always quite entrepreneurial from like the beginning. Like when I was 8 years old,
Okay, guys and girls, welcome back to another episode of Meet the Trader. Today, it is my pleasure to introduce you to Kaz, who is taking some time out of his day to join us. Hoping we're going to learn a lot from him today. It sounds like he's got a very interesting background, and I think we're going to share a lot of insights on today's session. Kaz, thank you so much for jumping on today. How are you?
well, thanks for having me, first of all. I'm pretty good. Yeah, thanks for asking.
Awesome, man. Before we kick off, I always like to give our guests 30, 60 seconds, couple of minutes to just introduce themselves, tell the audience tuning in a little bit about yourself, just to get a feel for who you are.
Perfect. Yeah, so I'm Cas. I'm from the Netherlands. I've been trading about 8 years right now. When I got in touch with trading, I was studying mechanical engineering, which I didn't like. I just went there because I was good with numbers. You know, when I take a look at the subjects, I was good back early in the day, mathematics, physics. So naturally, I went there, then quickly realized it wasn't for me. Then someone in my classroom showed me a trading platform, and I was like, "What's that?" So I need to know more about it. I bought my first book. I started studying trading when I should have been studying for the engineering study. Then quickly realized, okay, I have to drop out. It's not for me. And then I basically went on a multi-year studying at home kind of thing, combining that with multiple jobs I had to support myself. I didn't need that much money because I was still living with my parents. So I had a lot of free time to put into trading, and that's how I started.
Awesome, man. Sounds like quite an interesting journey. I
Yeah.
love the fact that you started this obviously 8 years ago. There's a lot of people I think that will probably be tuning in that have this vision and picture of overnight success in the markets. And I think social media kind of portrays that a little bit. So
Mhm.
obviously seeing someone that comes with a good amount of experience behind you, I'm hoping we're going to share some insights and hear some stories about your upcoming journey into the markets and what that was like. But yeah, super, super interesting. So you said your background, or at least educational background, was mechanical engineering, right?
Yeah, correct.
And you sounds like you figured out quite early on that wasn't going to be the thing for you. What was it that deterred you from, I guess, the traditional path that most people would take, and what attracted you to trading apart from, the love and enjoyment of the numbers?
Mhm. Well, I quickly realized that the study wasn't for me, and how did I find out? Quite simply, when I got back home from the classes, I just wasn't motivated at all to put in time into that. So I quickly realized, okay, I really have to force myself to study this. I'm not going to do it. Meanwhile, with trading, it came naturally. Like I didn't have to force myself. Every single spare minute I had went into trading, and sometimes it actually harmed my social life because I was always working on trading. Yeah, but that's how I realized, okay, I have to switch things. I have to get into trading.
Yeah, I feel like that story resonates with a lot of people. This idea of I've always seen trading as this thing that once it bites you, it doesn't ever really let go. For some
Hmm.
people, when they get the bug, it's very hard to shake.
Yeah.
And especially when you feel like you have that passion and interest for it, it makes sense just to delve into it and see how far the rabbit hole will go, I guess.
Yeah,
Um,
exactly. And like the thing is, I don't want to recommend anyone to ditch your engineering degree or whatever degree. But for me, it worked out. And also, if I look back at like my early childhood, I want to win. And that could have been annoying for people around me, but I always wanted to be the best in class. I wanted to be the fastest guy on the soccer field. I always wanted to win. And I was always quite entrepreneurial from like the beginning. Like when I was 8 years old, there was this group of people across my street drinking beers a couple of evenings during the week. I knew that when I returned the beers, I get a bit of money. So every day I would be doing that. And just these small things tell me, okay, I'm entrepreneurial, I want to win. And that also helped me in my trading.
Yeah, makes a lot of sense. I think, again, going from what I know from my experience in the markets and then obviously talking to hundreds of traders over the last few years, we kind of get this sense and this idea that trading tends to attract that type of person. If you're someone that is genuinely happy doing the traditional 9 to 5 path, I don't talk down on it in any way, but there's a lot of people that come to this field that don't want to have the jobs, want a little bit more freedom, maybe want that little element of control because they are fueled by that entrepreneurial spirit. So again, can completely resonate with a lot of the things that you said there. Okay, perfect. I would love to hear a little bit more detail about your specific trading journey and getting to where you are today. It sounds like there's a fair amount to unpack given you've got 8 years of experience behind you. Just to kind of kick things off with this, are you currently a full-time or a part-time trader?
Full-time.
Full-time. Awesome. Yeah. And what was that journey like for you? So you mentioned 8 years you've kind of been in this game now. How long did it take you to kind of find your feet before you could go full-time?
It took me almost 4 years because before I could actually trade. One of the reasons it took so long was because I was studying a trading style that just didn't fit with my personality. And I wasted a lot of time on that. So maybe a quick tip for the listeners, really take a look at your personality. What type of person are you? And really take a look at the strategies that you're currently learning. Does it fit with you? So in my case, I was studying a fully discretionary trading style. But like I said earlier, if I look back at how I was during high school and those things, it was always mathematics, physics. Now, I'm a numbers guy. I like objectivity, and that's like the opposite of discretionary trading. And I realized that after 2.5 years. So I wasted quite a lot of time. And then when I made the switch and also got help from someone that was experienced in that field, that really helped me to then become a profitable trader. Then still, it took me time to get an income from it because I was a student essentially. I was living at my parents' house. So I had frequent different kind of jobs on the side. And then after those 4 years, I had to build up capital. There were some prop firms, but it wasn't that big as it is now. So then before I could actually get a full-time income from the markets, it even took me some more time. But that's like, in short, how my journey went.
When you first started, did you think it would take you as long as you did?
Yeah, actually it did. I actually had quite realistic expectations from the beginning on, which nowadays people don't have. But just by pure chance, I was learning from people that told me, look, it's probably going to take you 4, 5, 6 years before you can do it. Is that okay for you? And I was like, yeah, for me, that's fine. I can work on something without getting immediate results. That was fine for me. So it didn't bother me at all, but I think indeed nowadays people are like, okay, I have to be profitable within a year, which is highly unlikely.
Yeah, I think the moment you impose that sort of timeline for success, the market's the first one to kind of tell you that it doesn't really care about what your timeline of success is. Yep. It's going to take you as long as you take. And I think the thing that you hit the nail on the head with there is it's really more about the person and finding a match between the person and the approach to the markets. Because I find a lot of traders in this day and age, they're looking for some type of one size fits all holy grail. And they're just trying to mimic somebody that they've seen online or from a course or a strategy that they bought, but they're not actually considering their personality, their lifestyle, and whether it'll make it work, right? You could give someone the absolute best strategy in the world, but if they don't have the type of personality or lifestyle to actually implement it, it's meaningless. It means absolutely nothing. So I think that's a really important point. I love the fact that you kind of started with that element and talking about finding that sort of match for you. So super, super interesting. Are there any specific markets, pairs that you trade at the moment?
Yeah, so I trade multiple markets. I believe in diversification. I believe in trading multiple strategies. Despite of what people say online, if you have a strategy, it's not going to work forever. There is a chance that it's going to stop working. So I believe in, if you have 10 strategies and 2 stop working, it doesn't matter that much. But nowadays, a lot of people they rely on one strategy, and if that stops working, your income source is gone. So I trade multiple markets, multiple strategies, all systematically. And one thing I want to add as well is you mentioned Holy Grail. A lot of people are looking for the Holy Grail strategy that works in every single environment. And that's never going to happen. So if I take a look at one of my strategies, it's a trending market strategy, which means if a trend starts, I can hop on early and get as much out of it as possible. This also means that if there's a trading range, I'm going to lose money. I'm going to get frequent false breakouts. I'm going to lose money. And what a lot of people try to do is, okay, I want to capture trends. I want to capture ranges. I want to capture high volatility, low volatility. It's not possible with one strategy. It is possible with a portfolio of strategies. So I think people need to realize that if you develop a strategy, it's only for one niche in the market, and you have to accept that if the niche changes, it's going to lose money. That's just how it is.
Yeah, that one personally for me cuts deep because, my journey into trading, I lost money for my first 6 years before I even hit my break even stage. And a lot of my battle was exactly what you just described there. I found a strategy that works, but the problem was I wanted it to work all the time. And I was failing to recognize that sometimes market conditions didn't suit what my strategy would thrive in. And the more I would try and force it, the less, the worse my performance was. And for me, at least psychologically, it was this battle of accepting that the markets are uncertain. One certain market condition is not going to continue all the time.
Yeah.
And also when it's going through a bad period, that's not going to stay the same way all the time.
Yeah.
And so I think most people are left with this dilemma of, or not a dilemma, I guess a choice, which is you take the approach which you've taken, which is you develop multiple strategies, identify the right market conditions, and then apply the right strategy for that. Or the other side is stick with your one approach, but then know what market conditions actually suit you, and then learn to do nothing in the times where it doesn't. And again, I think both have positives and negatives. But again, I think what you said at the start makes a lot of sense, which is it's got to fit you as a person, which obviously it sounds like you found quite a good blend with, which is, again, always refreshing to hear. So talk to me a little bit about your introduction to prop firms. How long have you been trading with prop firms in general at the moment?
Oh, that's a good question. I think I started with prop firms 2 years ago, something like that. Not entirely sure, but just from a friend, trading friend. I didn't know what it was. I knew about these traditional ones with the trading floors, but I didn't know about the online one. So just a friend told me about 2 years ago. Yeah.
Okay, nice. And you mentioned that you've been with FundedNext for, was it 2 months? Am I getting
A bit longer, just a
bit
couple of
longer?
months. Yeah.
Few months. Okay. What made you choose FundedNext? Obviously, in this day and age, there's a variety of prop firms out there. What made FundedNext attractive for you to want to give them a go?
Well, I've actually had quite some bad experience with prop firms this year, not paying out, giving you rules that weren't on the website. So there are quite a lot of prop firms that owe me a lot of money, which is quite of a shame. I'm not going to mention names here, but why FundedNext? The brand promise, paying within 24 hours. There are so many prop firms that are like, I'm going to delay the payout, wait a couple of weeks. We have to double check things. It's like so annoying, and a lot of prop firms don't allow you to trade while they are checking things. So that's was one of the things: the good reviews, professionality, the markets that you offer, a combination of these things.
Yeah, I think the brand promise is especially popular. I always find it funny when, compared to a lot of other prop firms, you get a lot of traders with FundedNext that are hoping and praying their payout takes longer than 24 hours, right? Whereas with a lot of other firms, you never get that mentality at all. So yeah, it works well for a lot of people. Okay, perfect. I would love to hear a little bit more about your specific approach, your trade plan, your strategy towards the market. Are you more of a day trader, a swing trader? Is there an approach that works better for you?
Swing trading, definitely swing trading, and mostly breakouts.
Mostly breakouts. Okay.
Yeah.
So I'm guessing again, I have a little bit of a swing trading approach to me as well. It's the kind of area where I feel most comfortable, and it ties in best with my personal life. So I know from my experience as well, I'm presuming you're going to be very similar in that you don't really sit and watch particular sessions. Do you use often limit orders, pending orders and stuff to get into the market, and just have areas that you'd like to get in and just leave the market to do its thing?
Yeah, so like I said, I have multiple strategies. One indeed is just pending orders. So when everything fits my criteria, I put in a pending order. That's it. The other strategy I trade is fully automated. So it's an EA that trades for me. And I hope in 2025 I can automate my other strategies as well, to basically limit input time from my end.
Awesome. Super interesting. So if you wouldn't mind, I would love to know a little bit more about your approach. If you're able to, would you mind pulling up some charts and kind of give us a little bit of an overview as to what you're looking for in the markets.
Yeah, definitely. Yeah. So what I've done here is basically within these two blue lines, you can see the price action of November. And one of my strategies is trading trends in the indices. So for example, the Nasdaq. I highlighted in blue what are good environments for my strategy. And in purple, you can see bad environments for my strategy. Now, a little side note, what type of trading do I do? Basically, what I want to see is quite a stable range for a certain time period. And all I'm trying to do is that if we break out of that range and a trend follows, I'm trying to capture as much as possible from that trend. That's like it's really simple stuff actually, but that's what I try to do. I tested this, I got the data, I know it works, and this is what I try to repeat over and over again. And the reason breakouts work is quite simply because when a trend starts, people are going to see a trend starts, and more people hop on, and more people hop on, and that's the reason why trending strategies work. There are plenty of examples of systematic trading firms that just do trend following. And that's the foundation of what I do as well. And the reason I highlighted these boxes is to basically show you that I fully understand when my strategy is going to make money and when it's going to lose money. And this helps me to sit through drawdowns. If I open up this chart, this is the performance of this strategy for the entire year. As you can see, it has had a good run up until about August. Then it went into a drawdown and now it's picking up again. The reason I can sit to 10, 20, 30, 50, 100 trade drawdown is because I know when it works and when it doesn't work. If I open up my trading account and I see, we had a 5 trade losing streak, for example, and I open up the chart and I see this purple box price action, I immediately know, okay, it's normal for the strategy to lose. It's ranging and I can only make money in trends. And I think by doing this, having a simple strategy, by having it tested, I know it works. And also by knowing when it works, I can keep my head cool, I can keep showing up. Because if I didn't show up and if I were like at this point, okay, it stopped working, I'm going to take a break, I would have missed the recovery. And I think that's like what a lot of people struggle with, is just sticking to the plan of a very simple strategy.
Yeah, I think that was really, really well put. I love the way that you've broken that down on the charts, but also had that level of awareness to understand that there are going to be periods where your strategy does really, really well. And obviously that's reflected in your equity curve. And then there are going to be periods where it doesn't do so well.
Yeah.
Did you ever find a challenge in trying to identify the shift between market conditions, or was this always reflected after the fact as a result of a period of drawdown?
Well, there are a couple of ways you can go about this. And what I personally do when I develop strategies is I want to keep it as simple as possible. Because if I'm gonna essentially put a filter in where I'm like, okay, I'm gonna filter for the exact market conditions that I need, that's also going to make sure that sometimes I'm going to miss trends. If I'm filtering out ranges, sometimes I'm going to filter out a trend and I might get later in a trend. So for example, now without filtering things out, yes, I get some losing trades here, but I can also get in on the beginning of a nice trend. If I make my filter more strict to figure out which conditions are the best, then I might filter out this part of the trend and then I capture a smaller portion. So what I just do is accept that I'm going to lose money in ranges. That's just a fact. But I'm trying to optimize and tweak as little as possible. And yeah, just accept that I'm going to lose money when the environment isn't right.
Yeah, it makes complete sense. And again, I think it's if you take this back just to a raw game of numbers, it's always a game of finding the balance between win rate and risk to reward, right?
Yeah.
If you're going to sacrifice some win rate in terms of trying to be, forward looking in front of the market and trying to get those better entries, you're more likely to have a better win rate in the long run. But ideally, and the inverse of that is if you try and look for that further confirmation, you might miss the better entry and therefore have a lower risk to reward on some of the positions by missing out on some of the potential upside of the move. So again, makes a lot of sense to me. I see you've currently got this up on a 30-minute chart. Is that your kind of time frame or choice, or does it work on any other time frames for you at all?
For this strategy, it is, yeah. So this strategy basically tries to capture an intraday trend and then hold that for multiple days to get the most out of it. Yeah.
Gotcha. And in terms of your stop loss and profit targets, how are these determined? So do you have a fixed size for your stop loss? Is it based on volatility? And how do you determine profit targets?
So if I go to the right side of the screen again, this example that I just drew in earlier, the range and then the breakout. Hold on a sec. There we go. That's much clearer. So basically what I do is, this is our range. Let's say I enter somewhere here. Let's say this is my buy order. My stop loss is just going to be the other side of the range. Always. So very simple. And in terms of profit targets, I don't have a profit target, because if you have a trend system, if you have a fixed profit target, like when it hits, sometimes the trend continues on for way, way longer. So I have a stop loss in the beginning, I have an entry, and I don't have a fixed profit target now.
Nice. I like that. I like that approach a lot. Um, do you use any kind of indicators as part of your strategy? Do they help? Do they contribute? Do they play a big part at all?
Not at the moment, but I am working on it. And that's going to be just a few simple indicators. For this particular strategy, I'm looking at a ATR-based trailing stop, again, to capture the most of a trend. That's basically all I'm doing. I'm not using any indicators at the moment now.
Okay, nice, nice. And is there a specific part of your strategy that you find is the most important? Are you looking for one thing in particular to be able to qualify you to get in or maybe out of a position?
Yeah, so the breakout that I drew on the screen, the range breakout, has to happen at a certain time period, basically, a time where there's a lot of volume, because when the breakout is on high volume, it tends to continue. So that's why.
And how are you measuring volume?
Well, basically, I don't really have to measure it. If I just remove everything and I go to a, whoops, that's the wrong chart. So we got the QQQ, which is basically your NASDAQ, but it's an ETF. I'm going to remove this. Basically, when you take a look at the opening, so this is the opening, which is 3:30 in the afternoon, Dutch time. This is when the US stock market opens, and it closes, the stock market closes here, which is right there. And what you can see, what is very common behavior for a stock market, is when it opens, volume increases. During the session, it's a bit lower, and then when the session ends, it picks up again. You can really see that here. If I go to a 15-minute time frame, it's probably a bit more clear. There you can see it. Stock market opens, peak in volume, goes down, end of the session, peak in volume again. So it's just I know at which time periods there's going to be a lot of volume in the NASDAQ, and I use that. So I don't measure volume that it has to be above a certain threshold. I just trade the breakout during times of high volume.
Gotcha. Makes complete sense. And obviously, coming from a background that you mentioned, mechanical engineering, you're obviously good or familiar, like playing with a lot of numbers, statistics, and things like this. Talk to me a little bit about how you came up with this sort of strategy. Did it go through sort of rigorous testing? Are you a big fan of back testing and things like this?
Yeah, absolutely. Yeah, everything I do has to be tested, and I have a very strict protocol for something to pass my testing or not pass my testing. Um, the way I start is basically with an idea. So I write the idea down as objectively as possible on paper, and then I basically just want to back test. And I have a very strict protocol for that. So what a lot of people do is just they back test, like, it's not the perfect thing. Let's tweak something, back test again. If you do it like that, you're going to build a perfect looking backtest. But those strategies tend to not hold up in the future, and you want to have a profitable strategy, not a profitable backtest. So there are a few things you can do. One of the things I do to make sure my backtest is robust is changing time frames. So if I test my strategy on a 30-minute time frame, I'm also going to test it on a 15. I'm going to test it on the hourly time frame, because what's that going to do is basically change the open, high, low closing prices. For example, if my breakout is based on a close above a certain threshold before it triggers a breakout, if I change time frames, that close is going to be in a different area. And if I see then on my backtest, hey, it works on the 15, it works on the 30 minutes, it works on the hourly time frame, that's a very good sign of a profitable strategy, or at least a robust strategy. That's one of the practices I do. I have a lot more things a strategy needs to pass before I actually trade it live, because yeah, backtest can be lying.
Yeah, for sure. And again, know this from a lot of experience myself. Do you backtest strictly on TradingView? Do you use any other tools or platforms to do that with?
I start with TradingView just as an initial test, because TradingView is very easy to visually see what's happening. But you don't have a lot of historical data. So then, depending on the markets, I switch platforms. So, for example, for this particular strategy, I tested on TradeStation futures, because then I can go back like a lot in history and test there. So it depends on market and on strategy.
Okay, yeah, makes a lot of sense. I like the fact that you're obviously a big numbers guy. I'm a big advocate of the importance of data behind your approach as well. And I think I resonated with this idea a lot when you mentioned at the very beginning that a lot of your early struggles came from trying to have a discretionary approach as you came into the business. And I think a lot of traders, and again, I think you'll agree with this, a lot of traders would benefit, especially in their early days, from having a more objective mechanical approach as possible. Because in your early days, you don't know what you don't know. When you don't have experience, when you don't understand the dynamics of a market and how it particularly moves, trying to be discretionary ends up just more being based on gut feelings and instinct,
Mhm.
which you have no basis on because you have no real
Exactly.
experience.
Yeah.
So that all makes a lot of sense to me. So
That's
obviously the emphasis on the robust testing I think speaks a lot of volumes, and I think it's something that a lot of people could take away.
yeah. Yeah, that's exactly what I always say to people is you're trading a discretionary style, and discretionary trading partly relies on experience, which you don't have as a beginner. So you're making it so hard for yourself starting off as a discretionary trader. If you switch that to a more objective mechanical style, you make it so much easier for yourself, and it also teaches you to think in probabilities, to think
Mm,
in terms of numbers. So
yeah.
yeah, it's the
I
better
think
way.
the emphasis on the back testing. I'm a big advocate of the psychology behind trading, and for me, a lot of your psychology problems will be fixed with a good foundation of data and back testing. It gives you a lot of exposure. It aligns your expectations the right way of what should actually happen in the market. Without that, you're kind of going on hopes, wishes, and desires, and that's what sets most people up for failure, right? It introduces emotion and it kind of spirals into a whole bunch of different things that you don't really want.
Absolutely. Yeah.
Perfect. Okay. If you're open to doing so, I would love to go through a little bit of your FundedNext dashboard.
Absolutely. Yeah. All right. There we go. So we are in FundedNext. Like we said, I've just been here for a couple of months, which coincided with, as I'm going to show you again, the bad period of this strategy. Let me put it on again. This was the performance of this year, and it's about this time I got funded with FundedNext. So I have had a couple of payouts from them, but as you can see, the strategy has been in a drawdown. And then if we take a look at the FundedNext dashboard, you can see it's exactly the same here. Just yeah, that's just part of it. I know the strategy is profitable in the long run, so I'm going to get out of this and get more payouts. But yeah, that's it. I don't win every week, and that's part of it. Yeah.
Well, that's the real reality that I think most traders need to hear, right? I think most traders are hoping that at some point everything just clicks, the markets become some kind of ATM, and you could just withdraw money whenever you like. And it's very different in reality. Would you mind talking me through some of the stats that you went through? We can look at things like your win rate, your risk to reward, and talk to me about if these are typical and normal for you, and a few things like that.
Yeah, sure. So as you can see here, the win rate is 66% and the risk reward was about 1 to 1. Typically for my strategy, also based on the complete historical performance, this particular strategy is going to have a 55% win rate, and the average RR is going to be a 1 to 1.5, 1.6. So essentially, I win a bit more often than when I lose, and I win more money when I win than the money I lose when I lose. So that's all you need. Like I'm not one of those traders that has a 1 to 10 risk reward ratio, because like you said earlier, if you have a huge risk reward ratio, your win rate is going to be very small. And the smaller your win rate is, the more losses you're going to have in a row and the longer your drawdowns are going to take. So I prefer having strategies a bit in the middle. It's easier to trade mentally. Um, so yeah, that's why. But this is like the win rate in this case is a bit higher than average.
Yeah, I always I like to put emphasis back on the element that you mentioned there, which is the mental approach. It's not that, having a 1 to 10 risk to reward is impossible to be profitable with. It's the fact that for most people, psychologically going through those losing trades and the periods of drawdown to achieve that, the risk to reward, it's very, very difficult, right? You have to have a certain type of mindset and personality to actually suit that. Whereas I think a lot more people would probably be far better at actually lowering their expectations in terms of risk to reward and then improving their win rate, which improves their psychology, makes them a little bit more consistent in the long run. So
Yeah,
yeah, I think
exactly.
we're speaking the same language here. Based on everything that you do here, and I'm probably expecting one answer from you here. Are you a big fan of journaling?
Yeah,
I figured that would probably be the case.
yeah. And
Are there specific platforms that you use to journal? What's your normal protocol for this?
yeah, so I used to do so much journaling. I don't do it now, and it has to do with the fact that my trading, for the most part, is automated. And I think journaling is, as a discretionary trader, you have to journal. But I think the goal of journaling, for the most part, is going to be perfect execution, making sure you take the trades you should be taking. And since my robots essentially take the trades, there's no real point in like journaling the execution because it is flawless. Um, but before that, before I was at this point, yeah, I've been journaling for a lot and in detail. I used Edgewonk for that, which is just a great platform.
Yeah, I actually switched to Edgewonk about a year ago. And
Hmm.
before this, I used to use just like sort of custom made Notion templates.
Hmm.
Edgewonk far superior. I've heard a lot of good things about Edgewonk. I know FundedNext have their own sort of journaling platform. Between those and I think TradeZella is another very popular one out there as well.
Yeah.
Heard a lot of good things. But yeah, I think, for a lot of people, I often get a lot of questions about how people should be journaling. And some people prefer the idea of actually manually doing it. And actually, I think the benefit of doing something digital is it's so easy to actually reflect and manipulate on the data. If you're
Hmm.
keeping a good detailed journal with, your approach to the markets, your thoughts, your emotions, it's so easy to identify those patterns between what goes on mentally and what actually happens on the charts, and then eventually what leads to your outcomes. And so, big advocate of the digital journals, and again, something for everyone to sort of take away from that.
Yeah, and it is boring, like it is boring work, but it's so beneficial because your trading journal is going to tell you if you follow your plan. Your trading journal is going to tell you what works, what doesn't work. Your trading journal is going to tell you which setups you should be taking and when. So, like, it's direct reflection on your actions. It's like your personal trading mentor, essentially.
Yeah. I
So
always say to people, if you keep a good detailed journal and you collect enough data in there, that becomes your holy grail. It's not the strategy, it's the data in there that will tell you where you can improve, what you could do more of, what you could do less of, what trading conditions are good, what thoughts and emotions are not good, right? So these are all things that are all a result of the boring stuff. It's the stuff that most people miss. And I think that's a reflection in the statistics of actually becoming profitable in this game.
yeah.
Okay, cool. So, if you don't mind, I think we're done with the screen sharing side. Seen a good amount of your strategy and your dashboard. Feel free to close that down. There's a few other things I would love to pick your brain on. I want to talk a little bit about risk management.
Mhm.
What's your approach to risk management? Do you have a specific amount that you like to risk per trade? Does this differ at all? How do you go about that?
My risk management depends on what type of account I'm trading. If I trade an evaluation account, it's going to be different from once I'm funded. My risk management also depends on the strategy. So it's quite hard to give you an answer, but per strategy, it is consistent. Like on this funded account that I just showed you, the risk is consistent per trade. And it's about 0.5 to 0.75% per trade.
Okay, gotcha. And does that vary at all if you were trading personal capital? Is that something you do much now, or do you only use prop firms?
Yeah, I also trade personal capital, and the risk is there quite low as well, so it's 0.5%.
Okay. Did you find that any of the limitations or rules that prop firms have forced you to change your risk management protocols at all?
No, no, nothing. I just
Okay.
trade exactly the same. Yeah. And
Nice.
like I said, when I do an evaluation, my risk is a bit more aggressive.
Mhm.
That has to do with the fact that if you risk 0.5% per trade or less, it can take you very long to get funded. And all the time you spend into an evaluation is basically trading without getting paid. So I try to be a bit more aggressive in the evaluation. But once I'm funded, no, I don't have any restrictions. I can hold trades overnight. I can do the risk management I want. So perfect.
Nice. Nice. I like that. Okay, perfect. I want to dive into a little bit about your psychology.
Hmm.
I think this is obviously an area that I feel like you're going to have put some emphasis on, given that at the start of the interview, one of the first things you talked about is finding a match between your personality. Um, I want to firstly ask about your focus on a range of different markets because we do a lot of these interviews and we have some people that seem to find their edge only trading one specific market.
Hmm.
So from a perspective of looking at what specific markets and how many markets you're looking at and analyzing, do you find that has any positive impact on your psychology?
Um, I don't honestly. I think trading psychology is a word that's being abused. I often say trading psychology is bullshit. That's not the case. I do think that people, when they don't get the results they want from trading, they blame trading psychology. I know for a fact that most of the times it's going to be your strategy just doesn't work. But then people blame trading psychology. So that's the first thing I wanted to say. The second thing is a lot of people only trade one market. Um, that's fine. But what I also see, especially in people that do a lot of back testing, is that if you develop a strategy and only works in one market, it's not a good strategy. So like if you're a discretionary trader, yes, trading one market can definitely be a solution, especially if you do day trading, because watching 10, 20 markets and day trading is going to be very difficult. So it does depend on the trader and the style.
Yeah, makes sense. We were potentially going to fall out there because my whole job is essentially as a performance coach and I focus
Yeah.
purely on psychology. But you know, the interesting thing is, ironically, I actually agree with a lot of what you said in the sense that when I'm working with a trader, the first question I have with them is, how do you know you have an edge in the market? Because essentially, if
Yeah.
somebody's losing money, it's only going to be for one of two problems. Either you don't actually have an edge because you haven't tested it enough, you don't have enough data to support it, or you don't have an ability to stick with that edge. And I think the problem that most traders have is they can't distinguish between one or the other.
Yeah.
Until you unequivocally know that you have an edge, it makes money, you've tested it, and you've got the data, then I can think you can start to say, okay, if you're not sticking with it, maybe there's a psychological element that needs to be addressed.
Yeah.
But so,
Um,
yeah, ironically, even with my job, I actually agree with a lot of what
And
you say.
yeah, I'm curious, would you then agree that because when I explain trading psychology to someone, I often tell them that trading psychology, like bad trading psychology, is a symptom of not having an edge. Because if you have a strategy, you tested it, you know when it works, you know why it works, you know it has losing months. Often I see that 9 out of 10 issues people have with trading psychology are gone. And then sometimes there is this one like issue left that people actually need to work on. But I think for the most part, feeling these emotions when trading is a symptom of not having done the work in your trading ability. It's the lack of confidence in your trading or strategy, right?
I personally find I think around easily above 50% of the people that I work with. I would even go on to say again, I don't have data to back this up. I don't keep
Hmm.
track. But I would say based on my experiences, maybe 60 to 70% of people fall into that exact category.
Yeah.
I think if you have the right data and you've aligned your expectations correctly with the markets, it's very hard to be disappointed, right? And again, a common question that I ask to a lot of people that are emotional in a certain situation about an outcome that the market has presented, my question to them is, if you went into every trade truly accepting that the market would either give you a small win a big win or a loss, how could you ever be disappointed? And the reality is, if you truly accepted that, you wouldn't be disappointed. But the problem is, most people go into the market hoping to win because they don't have the correct expectations because they lack the data. And that's why the emotions come as a result of that. Now, on the flip side, I do see that there are a smaller percentage of people that actually feel like they have an edge, but they screw themselves up by doing very obvious things which can easily be fixed. For example, they don't really understand their risk tolerance when it comes to money. They might be risking an amount of money that they're not comfortable with, which then screws up their ability to be consistent with their edge in the long run. And I find this is actually a lot more prominent in the prop firm space because people can develop this edge and they can test it on a $100, $500, $1,000, $10,000 account. But in the prop firm space, you have this capacity for an increased amount of leverage on your capital, right? A very small investment upfront can get you funded with $100,000, $200,000. And psychologically, that's a very, very different thing. People are not mentally equipped or ready to handle that level of money yet. And even if you have an edge, the emotion of managing the money sometimes get the best of people. So largely, I would agree, but I would say that there are exceptions to every rule, but it doesn't always disprove the rule.
Yeah, I agree with you as well. Like if you've been trading with €1,000 and all of a sudden you go for a 100K account, that's a huge step, and people then think, okay, hey, if I get the 100K account, I can get so much money. They put pressure on themselves. I agree with you. Then it's not a matter of lack of edge or lack of trust in the edge. It's just wanting it too badly and putting pressure on yourself. So I agree. Yeah.
The analogy that I give that a lot of people relate to, and I do these in coaching sessions because I think the area I compare trading to most, ironically, is actually health and fitness, right? And I explain to a lot of people, if your goal was to bench press 100 kg and you'd never been to the gym before, and you're on your first day, you started off with 20 kg, maybe just the bar or something, and then you went to 30 and 40 and 50, and you were consistent for like 6 months. Would it make sense to most people to jump from 50 to 100? Because it doesn't matter how good your form is, it doesn't matter how much practice you've done. If your body is not yet ready to handle the weight, you will fail. And I tell people your psychology when it comes to managing money is exactly the same. Just because you can manage $1,000, a $5,000, a $10,000 account, it doesn't mean suddenly jumping up to 6, maybe 7 figures it's going to be an easy transition for you, right? Your mind has to mentally adjust to these step ups. And once you do that, you can actually make a much more progressive and successful shift, increasing your capital in the long run.
Yeah, totally agree. Yeah.
Perfect. Okay. I would love to know a little bit more about some of the challenges that you had during your trading journey. So let's take this back a little bit. You mentioned, I think, was it for the first 4 years, you weren't able to go full time. You had a lot of these challenges because you were trading discretionary. What do you feel like was the biggest hindrance for you at that time?
Yeah, it was the trading style, and it was also me doing everything on my own. It was, locked up in my room, watching videos, reading articles, reading books. I think those two things. So being alone in this, and yeah, the trading style. And once I got in touch with someone that had the mechanical trading style, it quickly changed. Like everything clicked. Okay, I need to switch. This fits with me, and you feel it when you find something that fits with you. You feel it. So I think those two things, yeah.
I think the element, especially that you touched on there, which is you go about this alone, is a massive factor. And again, one I can completely resonate with, right? I started trading in 2012, and I didn't actually start networking or reaching out to others till really, I would say about 5 or 6 years ago. So I went through a large chunk of my initial years not really having the people around me to have any sort of level of guidance. And back when I started, there were no Instagram gurus, there were no courses, no mentorships. There was a lack of information. Whereas I think in this day and age, almost the problem is there's too much misinformation.
Yeah.
How would you say you got over that barrier to actually maybe find the right people to help you on your path? And maybe what advice would you give to others that are still trying to find their path?
Well, for me, it was researching like, okay, I'm stuck in this. I need help. So I started researching basically someone that was already there where I wanted to be. And a quick side note here. Nowadays, a lot of people online claim they are where you want to be, and that's not the case. So, if you are going to look for help, if you are learning strategies from someone, be sure the guy actually is profitable, that has a track record, that trades for a fund, that used to trade for a fund. Like anything outside of that, I wouldn't learn from that person. It's the same thing as if you want to hire a personal trainer. If you hire a personal trainer and the guy is fat, I wouldn't listen to him. It's the same in trading. Like learn from people that actually can do this well. That's the tip I want to give.
Yeah, I think it's such great advice because, I actually think about this a lot in business. And when I first started my coaching business as almost a side hustle, I had this period of time where I was getting so much advice from people that had never run a business before. You should do this, you should try this. And I think the person that gave me the advice that actually clicked the most, they said something to me, which was you should only take advice from people that you would trade places with. And I think that's so powerful, right? And you can carry it into every area of life. You talk about it with, getting a personal trainer. I also think it's, so true in the trading world as well. It has so much application in many areas of life. So yeah, again, speaking the same language here. During those early years, that first 4-year period where you struggled to find your feet, what kept you motivated to keep going? Because I think for a lot of people, they will undoubtedly go through a challenging period. And I still like to tell people that even once you make it as a trader, and I use make it in quotations, it's not sunshine and rainbows. You are going to go through challenging periods. As you showed today, you're going to go through periods of drawdown. What kept you in the game to stay motivated to eventually find your kind of breakthroughs that you were looking for?
That's going to be a boring answer. I just like the job. I like trading. I actually like it. And if I'm being honest, I think a lot of people are getting into trading for the lifestyle they see online, but they don't actually like the job. They don't actually like to put in the work. They don't actually like to research things. And I did. I liked it. So even when, my friends were hanging out, I was studying trading because I liked it. And that's what got me through all these periods.
Nice. Very real, very realistic. So I love that,
Yeah,
man.
it's like nothing fancy, it's just a boring answer, but
Yeah.
that's it.
But I think sometimes the boring is usually the most real stuff, right? So yeah. Um, okay, last few questions before we wrap up today. Is there anyone that you look up to or inspires you in the trading industry?
Not like one person per se. It's just I study like I've been trading for 8 years. I still study things. I still am learning, and it's from people in my niche. So there's going to be systematic trading firms, people that manage a lot of capital, and that's like there are so many different people that do that. But that's like the group of people that I look up to. Yeah.
Nice, nice. Okay, great. What are your future plans, or do you have a future vision when it comes to trading? Is there a certain level that you want to get to? Do you want to eventually break into, working for some type of fund or starting your own? What's your end goal?
Yeah, so indeed, starting my own fund. Right now, like short term, the goal is to get as much funded accounts as possible with as much good prop firms out there. And next to that, building more trading systems. That's like the goal for 2025. And then about 2026, 2027, starting with launching my own fund.
Awesome, awesome, man. I really, really like the sounds of that. Final bits of wisdom to come from your side. Do you have any specific advice for traders that are currently struggling and hoping to become a full-time trader at some point? Any words of wisdom, anything that you could take from your experiences that you think would help them along their journey?
Yeah, sure. Two things. The first one is, do you actually really want this, or is it for the lifestyle? And the sooner you figure that out, the better, honestly, because I see so many people wasting time in trading while they were better off just passively investing in an index fund. So that's the first thing. Do you actually really want this? Because it is difficult. The second thing is what's the bottleneck? Like, why are you not profitable yet? And it can be a few things. No strategy, like your strategy just doesn't have edge, or your psychology isn't good enough, or you don't have enough capital and your risk management is not in place. It's one of these three things. And I think identifying where your issue lies, most likely strategy, most likely for most people, that's going to help a lot. And then the next step is going to be, okay, what's your trading style? And then looking at people that successfully trade the style you want to trade, and then learning from them. And that's going to help you to build your first profitable strategy.
Perfect. I think some great words of advice and a lot for people to take away there. Final question for you, more so for us more than anything. Do you have any suggestions, recommendations for things that you would like to see at FundedNext that we're not currently doing or offering?
Oh, wow. That's a good question. Not really at the moment. The support was good as well. I had a few questions in the beginning and it was quickly solved. Maybe one tip. I like to hold positions for multiple days. And when the end of the payout cycle is at midnight, all positions get closed. Then sometimes I have to be at midnight re-entering again. That might be something to solve, especially when there's a payout, I get it. You have to pause trading, the withdrawal has to be made. But it also is the case for accounts in drawdowns. For example, my account, which is in a drawdown, closed trades at midnight, but I can't ask for a payout. So that's the only thing. Other than that, it has been all good.
Okay, gotcha. We'll definitely feed that back to the team. Okay, I could probably talk to you for another few hours, but we're gonna wind this down today. Kaz,
Yeah.
it's been a pleasure. Honestly, I feel like I've resonated with a lot of what you've said today. Your approach to the markets, your psychology, your thought process all seem to make so much sense to me. And I think for anyone tuning into this episode, they're going to get a huge amount of value for this one. So Kaz, it's been an absolute pleasure. Thank you so much for sharing some time with me today. We're hoping we're going to pay you out much, much more in the future. And hopefully we'll do another one of these, a part 2, at some point in the future. Thank you so much, man.
Yes. Thank you very much for having me.
Appreciate it. Guys and girls, I hope you enjoyed that episode of Meet the Trader. If you've enjoyed it, make sure you like this video. And until the next one, stay safe, trade safe, and I will see you soon.